I want to welcome to the resource videos that we're making Melissa Brown, who's a longtime colleague and friend of mine. Who I'm going to tell you a little bit more about her in a minute, but I want to predicate that by saying if there was a Dr. Fauci for
Oh,
fundraising research, it would be Melissa Brown. So just so that you know, uh, engaged with Lilly School of Philanthropy, and you and I go back to when it was the Center on
yeah, I
Philanthropy.
think you were just out of college. It
It
was,
might have been 20 plus years in the research department, on the advisory board and associate editor of Giving USA for a decade.
mhm,
Um, let's see what else. Ran the nonprofit research collaborative for a number of years,
Ted.
um,
Mhm.
10 years. When I need a piece of research interpreted so that I can understand it, which for those of you who know me is a big deal because I'm just not that bright. Melissa's my go-to person. What did I leave out, Melissa, in terms of your background? Because when I say you're the Dr. Fauci of fundraising data and information, that's a sincere compliment. But what?
Yeah, I feel embarrassed about. Okay, so I did the Strengths Finder thing recently, and there were two opposites, and one was I always look for more information, and the other is I can find simplicity. I can present simplicity in
Yeah.
complexity. Those are both true.
Yes.
I
Yes.
love that stuff.
Yes.
So if you give me a question, I will find the
Okay. And
answer.
it's absolutely true. I've asked Melissa questions for 20 plus years, and never have you failed to answer the question with information. I mean, whether I like the answer or not, I don't know is ever relevant. I
Sorry.
may not have liked what I heard, but
Yeah, I might
uh,
be Googling it while we're talking because I
yeah,
want to
I
know.
don't know. So you even today present Giving USA information on
I
behalf
do.
of Giving USA. So
Hmm.
even though you're not editing it anymore, you're sort of a go-to figure because
Yeah,
you've
I have
always
several
been able
clients.
to explain,
Yeah.
you know, the data. Let me start by uh, talking about sort of state of current affairs, and I'll test some things that we've heard from clients and others and see what your thoughts are. There's nothing to compare today to. We're not saying
Not.
let's compare one
Yeah.
recession to another. This is
Yeah.
unheard of.
Right.
We've not experienced it. And there seems to be a lot of initial anecdotal information that there's a lot of giving to sort of those immediate needs
Hmm.
organizations. And we've
I've
seen
seen
it in communities from funders.
it.
So
Hmm.
you're probably hearing and seeing that as well.
Yeah. Oh, we definitely hear it from the big funder, from the big donors who are doing immediate relief work, science work, bench science work to try to get vaccines and treatments figured out. But also, homeless shelters, food programs. A lot of really direct relief work right now is happening very successfully, and some of your clients too,
Yeah.
who are serving people who are very vulnerable, whether they're vulnerable to the virus or they're living in a assisted living or some kind of congregate living facility where you worry about their
Right.
susceptibility. Your
Domestic
clients,
violence.
right? All of that. Those are all situations where people already need help and they need it even more now. And people are digging deep. I mean, I'm scraping out the bottom of my car seats, to make sure that I can keep giving.
Yeah, well, I know I've known you a long time. I know that's probably true. But Melissa, what a lot of people get to in the nonprofit sector, is we're in a crisis, to use
Hmm.
that word. And so they have to juggle, governing and running the organization against the fundraising component. And we saw it during the recession that a way to manage your way through it financially was to cut fundraising staff, which,
Ah,
yeah, right, which we think had a long-term,
sure.
it was hard for many organizations to recover. So
Yeah.
I gather your opinion on that. What would you tell clients and others? Look, we're trying to raise money. We recognize we need to keep doing it. What would you say to them? I mean, what are some of the,
Say hire fundraising staff.
okay,
Fundraising is about relationships. Relationships take people. You cannot automate a relationship. You can automate some of the communications. You can send out emails and set up social media on Hootsuite or whatever, but you cannot make that relationship work unless there are people behind it. Every single staff member has a fundraising responsibility, and there needs to be somebody who's the spider in the middle of the web, making sure all the pieces pull together and that nobody drops the ball. I'm going to mix metaphors there.
yeah,
So you have to have fundraising staff. And if you cut back now, I can guarantee you will raise less money.
yeah.
If you keep fundraising, you have active fundraising programs, training for all your staff, your board, you will raise more money.
And And not only does your research support that, interestingly enough, a number of years ago, and I love when this came out, was boards that are engaged in fundraising and organizations, their organization raised more money. And it didn't matter how big or what kind of organization it was. Your
Yeah.
research said if they're engaged, you're going to raise more money.
Right. And we did a study about all volunteer fundraising compared to staff fundraising.
Yep.
Guess what? Staff fundraising raises more money. And I just came out with a study with Market Smart and Donor Search this past week.
Okay.
And in that one, for major gifts, we found that if you have 3 or more people involved, staff, volunteer, program staff, fundraising staff, 3 or more people who have responsibility for major gift fundraising, that organization is more likely to meet its fundraising goals.
Wow. I'd see that's new
Really
information.
clear. Yeah, it's brand new. I mean, it's last week.
Yeah.
Basically, coordinated efforts at building relationships.
Yeah. So what do you say to the group that's hunkered down thinking, well, the stock market dropped? I mean, it's dropped, it's coming back. We got in 2008, we got into the everybody was broke mentality, not you and I, but a lot of organizations, right? What do you say to them right now? They're watching that,
This
MSNBC ticker every day.
right. The stock market is a long-term proposition, and people who are invested in the market are usually invested for a long period of time. There are some day traders, but it's really about holding an investment over a period of time and watching it appreciate over a period of time. Yesterday's performance is not a period of time. So it really matters for fundraising. It really matters what the market looks like at the end of the year.
Okay.
You build a relationship. You solicit the donor's input. You get the engagement in the project, and then when the time's right for that donor, you say, "Hey, how would you like to be involved? We need $100,000 or whatever to complete this project. Where do you see yourself?" And that donor will say, "Well, I can give you 50 grand now in cash, and at the end of the year, when the market's back, then I'll give you the other 50 grand."
Well, that's interesting. Some of our clients that we do campaign work are a little skittish, and we said the same thing. I think it's a matter of when to solicit the gift and how to structure it. So their desire to support the organization didn't decline. It's
Not at all.
they just cannot do today what they wanted to do. But so you're with me on think about how do you structure the gift, not whether or not they want to make the
Sure.
gift.
It's can there be some in cash now? How formal is the gift agreement? Is it going to be paid out over several years, or is it going to be all in one chunk? Is it going to be something that that they might take a loan out? I've heard of people who care so much about the organization, they take a loan out on their home. I think that's insane, but they did.
Yeah.
To support a charity that really mattered to them.
Yeah, we've seen, we've seen angel investors, give a low interest loan and then just towards the end of the project, just, write off the loan. You don't have to pay it back.
Absolutely.
And with today's interest rates,
they're all low interest.
they're all low interest rate. Yeah.
Right.
What is I got to be a pain for you every year because right around Giving USA time in early June, I said, remember these emails or phone calls or interactions. Am I going to like this year's results or not like this year's results? What's your instinct now tell you? And I think again, what happens now, we won't know for some time, but what's your
we won't know till the middle of next year.
Yeah.
So, and there's some indicators that come out. The Fundraising Effectiveness Project put together by AFP and Urban Institute, they tell us every quarter what's happening with the charities they track, but of course they don't track every charity. Right. Giving USA is based on 3 important things, and what's happening in April is not as important as what happens in December.
Okay.
So April's bad, March was bad, may not be any better, but by December, who knows?
Yeah.
If I could read that far in the future, I wouldn't be sitting in a house in Indianapolis. That's for sure. So the 3 things to watch are the stock market for sure. And when the market's improving and people feel it will, they're more likely to give. But also just if it improves in December, that will drive up giving at that time of year.
Okay.
The other thing is personal income. When 17 million people lose their jobs all at once in a couple of weeks, that's going to take a big hit this year. Personal income is going to be a big problem for charitable giving, especially for those households, but all the rest of us who are trying to support our daughters or keep paying people, to do the yard work, because even though it's not in my budget, I want to help my neighbors and so forth.
Right.
So trying to spread it around. So that's going to have an effect. lower personal income means lower charitable giving, and
I have less money to give.
75% of the total is from individuals, so that really matters. And the other one is for corporate giving in particular, which is gross domestic product. So if we're in a recession, which people say we are, then you can expect corporate giving to go lower. But it's not this year's giving that's being driven by this year's gross domestic product. This year's giving is being driven by last year's gross domestic product. There's a lag.
Right.
So actually corporations are in a sweet spot because last year was a pretty good year for them.
Yeah,
so,
which may be why many of them have said, we've heard, we got sponsors for our event and they said, just keep the money.
Just keep it. We've already budgeted it. They built this year's budget on last year's profits.
Yeah.
So next year, you watch out for the corporate giving. So watching the stock market in the long run, not day to day, you'll go crazy, but watch it once a month, right? And talk to your donors, because not every donor is invested in the same assets.
Right.
Some have bonds, some have nonprofit bonds.
Right.
So they might not be affected by the stock market, and just get a sense from them what's at play for their assets and their commitment to your organization.
Again, the relationship and the discussion with them individually.
Yeah. Absolutely.
Go ahead.
May I add one more thing?
Yeah,
There's
please.
something else at play that we've seen in the Chronicle Philanthropy reported it this week. Over the past 4 years or so, donors have contributed huge amounts to donor advised funds. There's a lot of tax reasons for that. They don't matter right now. That money is earmarked for charity already. And we've seen donors start to give it out this year in response to this crisis. So if you're not already telling your donors that you can accept donor advised fund gifts, every registered charity can, make sure they know that.
Yeah.
They might give you $100 from a fund they've already set out for charity, and they might not realize that they could give $100. They might think that it has to be a large gift. No, it has to be a gift that matters to you.
And, a lot of folks have asked us about the deductibility of that $300 or $600 joint above the line. My sense is that might be attractive to a lot of people, but maybe I'm wrong, and you will tell me. I don't, as interesting as that is, again, if you don't have the money, you can't do it. But B,
exactly.
Is that really going to drive a whole lot in your?
Yeah, I mean, essentially, you're saying to people, hey, if you give us $400, you'll get part of it back.
Yeah.
At the end of the year, in terms of a lower tax on your income.
Yeah,
that does appeal to some people, and they might change the amount of the gift if they know that's true.
Or add another $300 or $600 to the gift.
Right. I would definitely be pushing that at the end of the year when people start to think about their tax position.
Okay.
To start to think, oh yeah, I have to file those forms in January, now July, but still, to say, yeah, I could get some of that back. But it's not. I don't think that's going to be the driver for most of us. And the people who already itemize are going to itemize. They can now itemize up to 100% of their AGI, their adjusted gross income. That's more interesting in terms of gifts that will really make a sustainable difference for charities, is the donors who could take 100% of AGI instead of having it capped as it was at 50%.
So one could conclude, if you have a robust set of relationships with people in that tax bracket, then this, even though the market's a little wonky, this is probably not necessarily a bad time for them in terms of.
I mean, if they have assets, and if they care about your charity, even if they have a loss on the stock,
right,
they'll sell the stock, take the loss,
right,
and then give you the proceeds,
right.
Which, depending upon if they have enough assets to live on after that, that might make a lot of financial sense for them.
Yeah,
they donate the proceeds, they take the loss, and they get the deduction.
Yeah, you and I have been doing this long enough to realize that the folks in that category didn't get there by accident, and they have a good sense of how they can be helpful. And I don't think this particular economic situation might give them pause, but I think it's about, again, structuring something, not whether or not they are willing.
Right. The willingness is there.
Yeah.
And we've seen it. I mean, there was another survey that came out this week. Can't remember who released it, but that 30% of the people surveyed said they would give more to charity this year because they see the need.
Yeah.
People give when they feel like they're, if I may, I heard this expression decades ago: money is me where I cannot be.
Yeah.
It's a Lutheran person who said it in a newsletter that I read.
Yeah.
Money is me where I cannot be.
Yeah.
So when you care about something, your heart is moved, your passions are engaged, you trust the people who are going to help, a group of people you care about, you'll find a way to give. If
And
you're
you,
borrowing
yeah.
against your house or selling a stock at a loss or cleaning out under your car seats, you will
Yes.
find a way to give when you're moved.
Well, and I had a conference call, a Zoom call with a client in a campaign, and the chair of the cabinet said, I talked with a donor, and they said, I want to continue. I want to do what I wanted to do. Like, I still want to make a meaningful gift, but I need to wait. And so it illustrates that what they're basically saying is they're kind of waiting it out, but the support is still there ultimately.
Right.
Right. So
Absolutely.
yeah.
And every organization in the campaign, every organization that has major gift donors has a story like that.
Yeah. And you and I would, say major gift donors is unique to each organization. So don't think Harvard when you make that statement.
A study came out this past week with the major gift benchmark study.
Yeah.
Came out from Donor Smart and Donor Search and Market Smart. And we found, there was a whole group of us working on it, that the most frequent size of major gift is $1,000.
Yeah. Okay. I'm not surprised.
Now, certainly large organizations, they might have a $50,000 minimum for a major gift. But, for most charities, it's around $1,000, might be $5,000.
Yeah.
It goes up with the organization, the amount the organization raises. But
yeah.
That $1,000 is worth the relationship, worth the take the time to build the relationship.
Well, and again, that size gift, leads to other giving. So
Even if it's planned giving. I mean, I'm in the $1,000 a year gift category, but I put planned gifts in my estate plan. Absolutely.
Yeah, I know. I think you and Kevin, there's 128 different organizations in your estate.
Something like that. Yeah, when we counted it up, we had to negotiate a little bit whose favorite was going to get the assets when we both are.
I got you. As long as the girls know they get nothing, that's the important thing.
Pretty much it. Yeah.
Yeah.
Sorry,
right.
kids.
Okay. What is your what's your prediction here? Now I'm gonna divulge mine before you answer that question to show you I am willing to make a prediction myself with respect to the charitable sector. And you're the first person I've asked the question of that broadly. Some of the folks I've said about giving, et cetera. So I'm going to make a broad, and you tell me your thoughts. So my own opinion is that I believe that when we are given the all clear that the stock market will begin to, maybe more steadily have daily positive outcomes leading to a better December. I do think there may be a number of charities that don't exist. And unlike the recession and the change in the 990 where everyone said they're going to drop by a third and that didn't happen, I think there's going to be some charities that unfortunately, just couldn't survive this extended moment in time. I want to also believe on the governing front that organizations are going to their governing bodies are going to get a lot more serious about financial planning, having a cash reserve, and how do we engage in bringing revenue to the table. Those are maybe they're hopes, thoughts about what do you think is going to happen?
So after the recession of 2007 to 2009, there was a study. See, I do everything I do.
That's why I told Dr. Fauci, go ahead. I don't mean to interrupt.
So we found that during that recession, there were, I think it was 5.7% of all the charities that filed a 990 essentially closed during that period.
Right.
Prior to the recession, it was 4%.
Yeah, so it was minimal.
It was a growth. Yeah, it was a big rate of growth on 4% as the denominator, 1.7%. But it was a small percentage of the total number of charities.
Right.
Now, were they financially healthy at the end of the recession is a different question. And did they subsequently, we gave, I think, a couple of year window to do the analysis because we knew it might not be immediate.
Right.
But that's a different question than whether they're still operating and still filing a 990. So this particular event in time, there are drivers beyond the finances that might affect charities. So definitely employment. Are there people staffed and able to do the work? There are changes in technology that are changing service areas and also how fundraising happens. So that's going to affect whether they survive or not, whether they can adapt, whether they feel like they want to adapt. But when we think about it, 75% of the charities have less than $200,000 in income. So, that's the digging under the car seats kind of fundraising to keep those limping along. It's the really big ones that are doing, maybe national work or really major hospitals and universities and things. They'll feel the hit in their endowments, art museums. They'll feel the hit in their revenue sources, so their earned income. In government grants, for sure, will also be a problem. Those are the ones that already we're losing higher educational institutions for a variety of reasons. So those are the ones that are most vulnerable, I would say, hospitals and higher ed, because their revenue sources are not just philanthropy.
Yeah.
And they're losing all three major revenue sources all at once.
So oddly enough, if you have a higher philanthropic component to your annual revenue, you think that's arguably a safer place to be.
Sure.
Okay.
Yeah, because foundations give from their income. They seldom exceed the 5%. It's a floor,
Right.
But they seldom exceed it. The floor falls, the assets fall, they give less.
Right.
The government, we already know, is trying to bail us all out, and won't have enough to be giving out government grants. They might not even be paying the fees that they owe for
That they
contracting
already
services.
are. Yeah. Right.
Because that's on a reimbursement basis. People in disability centers and that sort of thing. Those charities are hurting already. And gate revenue, from whether it's from a museum or higher ed or hospital, that's all going to go down. So organizations that have a strong philanthropic base and donors who are willing to sell stock at a loss, give from a donor advised fund, search under the car seat, whatever innovative, hold bake sales, whatever innovative strategies they can, are going to be in a better position.
And is it fair to say that this market performance, if it looks more like a V, what we've learned is that foundations, they use that rolling average anyway. So
this 3 to 5 years.
Yeah, this period of time may not show up immediately. It will, but if it's a V, it could be pretty minimal in terms of
year end. And now foundations, many of them were caught up, on a fiscal year. So we're not back by June.
Yeah.
The end of June.
Yeah.
And yes, that's going to really hurt in subsequent foundation grant years, because they will incorporate that lower period that's going to be at the end, I'm assuming, at the end of June, still in effect. So that will affect their grant making for at least 3 more and up to 5 more years.
Yeah.
Now, if they work on a calendar year, as I said, if I could read that.
Yeah. Well, I've long said that 5% is the legal minimum. They could do more, and I'm not on a foundation board. I don't get to make that decision. And we certainly in our community have been blessed that a few funders it looks like they're doing that. So to be fair, thank those groups that have said maybe they learned from the recession. We have to lean in and not, behave in a normal.
Well, and they've had some pretty good in terms of asset growth in the last few years.
Yeah.
Things went pretty well. So, maybe they're saying this is the right time to take it into that rainy day fund.
Yeah. Well, maybe they chatted with you, Melissa. I don't know, but
I doubt it. But
okay.
I hope they figured it out on their own. That this is the worst national crisis.
Yeah, I told them I still have of our 5. There's still 2 at home. Well, 3 with a college freshman who didn't go back, but the 2 at home. I said, well, all 3 of them at dinner. I said, this is your Great Depression. You will talk to grandkids about this moment in time. And they hadn't really thought about it, and who can blame them? But this is not an insignificant moment. I'm gonna dig through a lot of what we talked about, and I reserve the right once some time has passed to re-engage you in another call and see if our prophecies were actually true or not. I have no idea. I just know that, as a consultant, I like to have answers. And, we kind of talked and said, I'm not sure I have all the answers. This is not a replicable thing where we can look at. History is not. No.
We do know that philanthropy will recover.
Yeah.
There's a long trend line, goes back before I was born.
Yeah.
Actually, it goes back even before that, but because we have tax records back to the first deductibility in 1917.
Wow.
And it does recover. Philanthropy recovers. Now, it took 7 years after the recession that ended in 2009.
Yeah.
We were back above the prior level,
yes.
After 7 years. And the Lilly Family School of Philanthropy called that. They predicted that. They were absolutely right. It's then it was sustained for a while. We were well above 2% of GDP for several years there, and then this year, well, GDP is falling, and so we'll see what happens.
Yeah, and again, my mantra, for years has been individual donors create sustainability. That's the best pool of philanthropic resource you could have as individuals. And that has not only never changed, it has never been more important than right now, probably.
Exactly true. And in fact, it's even more true, but it doesn't show up in Giving USA because of the donor advised fund transfers
Yes.
that occurred earlier and that are now, those gifts were made to donor advised funds in 2017 or
Right.
18. And they're now being passed in 2020 to the charities that are so needing that support to keep their programs going.
And when I talk about the data in a very small segment, Melissa, because I'm not capable of doing more than the basic chart, I say to folks, look, I think individual giving is 80-90%. When you include donor advice funds, it's really super high. It's very high.
And most of those are individual gifts, originally, and they're now in an institution, but once they're given to the donor advised fund, they don't show up again in Giving USA.
Yeah, they're
like United Way doesn't show up again in Giving USA, and the money goes in, money goes out.
Yeah.
But as far as the charity is concerned, from fundraising perspective, it takes
revenue is revenue to them.
Yeah, right. Yeah. And it takes as much work to raise money from a United Way as it does from a donor advised fund, as it does from you or from me.
Yeah, I accept that you're in your car digging out change. So I mean, apparently you're just you're an easy prospect for folks.
Yeah, you say what little tiny amounts that are falling under the seat.
At this point, for those that are struggling, it all adds up. I'm okay. So I'm going to send you some suggestions downstream about reconnecting and seeing if we were right. In the meantime, for those of you who've enjoyed me talking to Melissa, you see why I call her the Dr. Fauci of the nonprofit data sector. She knows everything there is to know, and so I know you won't admit that.
I want to know everything.
I know it's true. I know you won't admit it. It's true, but we can debate that over a cup of coffee when we're able to actually be in person. But at any rate, Melissa, thank you for joining me.
Dave.
I appreciate your time.
Yeah, Melissa Brown. Thanks so much.
You're welcome. Yeah, Melissa Brown. Google that.